Howdy, 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 and welcome back to Won't You Be My Neighbor. I'm Brandon from Vegas, your favorite Vegas realtor. Over here to my left is my lender of the all-time, Mr. Bill Gaylord. How you doing, Bill?
I'm fired up today. We're gonna have
man,
some fun.
You look fired up. You bringing some good energy, man. I just came from the gym, so I'm bringing a different kind of energy. Yeah, man.
You got some good cologne on today.
I sprayed the Creed. I protected y'all.
Okay, good.
How you been, man? Last time we talked, we had a good conversation about what it takes to be approved, and I know personally, I've actually sent a few leads your way. We've started to get them in the system. So how's that going?
It's going great. There's a lot of people there's a lot of activity. People really want a house.
Yeah.
Right? They're ready to get into the house. They're tired of renting and taking that first step, getting over the fear, talking to somebody and getting a game plan.
What did you said something real catchy before we went live. Bill does this thing where he says like the catchy like title of the video, like 5 seconds before we go live. This guy has like a magic ability to always have that cool phrase. What did you say right before we went live?
I said, Brandon, people don't want a mortgage. They want a house.
That is perfect. That is literally what I deal with on a daily basis. I get probably at least 20, between all social medias, I get 20 people who reach out to me daily. Brandon, how do I get a house? How do I get a house? How do I get a house? And when I tell them, hey, the first step is figuring out what kind of mortgage you can afford, I can just see the excitement, right? They've been looking on Zillow, which is fun. They've been dreaming, which is fun. And then the second I bring reality of like, hey, here's the cost for this thing, I can feel the energy leave the room.
Well, it's funny because they go to the realtor first because they really want a house. And so they look at properties and they go, oh, they get all excited. And like you said, and then they got to come to me and I got to figure out how do I get them a mortgage?
To me, it's like the honeymoon phase, right? Like you meet a person you're attracted to. You see, I said a person. I'm getting better, guys. I'm getting so much better at this, all right? You meet a person that you're attracted to. And there's that excitement of like, oh, what could this possibly be? Like,
right.
Oh my God, is there a future here? Is it like, oh, are we gonna have fun together? Are we gonna vacation? Do they think I'm cute too? And then you date that person and then you're like, oh shit, this comes with a lot of responsibilities and rules, right? There's that moment of like, have I made a huge mistake, right?
No.
Did you ever, one of my favorite shows of all time is Arrested Development. Did you ever watch that show from the early 2000s?
Barely.
Barely, okay. So my most famous character, or my favorite one, is called Gob Bluth. Will Arnett. You know Will Arnett? He's in a lot of comedies,
I like
right?
Will, yep.
And he was infamous by, he would do something, he would date a girl, or he would randomly get married, and then he would go, I think I've made a huge mistake. And I feel like that's how people feel when they reach out for houses, right? They reach out and they're like, yeah, excited. I'm going to go look at a $500,000 house. And then I'm like, hey, we can't really look at those houses until you're pre-approved. And they're like, I think I've made a huge mistake. That's the feeling I get. So what I want to talk today about is first-time buyers, right? People don't know what kind of loans they get. They think FHA loans are the first-time buyer loans. They think FHA loans are only for first-time buyers. So I want to provide some clarity from both sides of the room on what makes a first-time buyer. So from you, because you guys are the most important place to start, from the lending perspective, what makes a good first-time buyer? What even qualifies for that?
Yeah, so definition of first-time buyer is not owning a home for the last 3 years.
Okay,
that's as simple as that. If they have a property that they are renting out, that doesn't classify as a first-time home buyer. So you can't.
I thought it was
own
name
a
on
current
deed.
home.
No. Can I pause real quick? They were always told us that it was name on deed. So if it's like an investment property or a rental property where your name, like someone else is living in your house, but your name is on the deed, you're still considered a homeowner technically?
Correct.
Okay.
Yeah, so that wouldn't classify as first time. Yep.
Okay.
So they basically no home ownership in the last 3 years.
Okay. No home ownership.
And no name on deed.
So let's say someone was living, let's say husband and wife living in a house.
Right.
His name was on the deed. He bought the house before they were married. So only his name is on the deed. Even though she's been living in the house, is she still considered a first-time home buyer?
She could be a first-time home buyer, but if they're buying together, they could not buy as first-time home buyers together.
So she would have to buy solo.
Solo.
Now, I do not want to get anybody caught in mortgage fraud, which is why I have you here to confirm this, right? So with first-time buyer or FHA, typically the big limiter is it has to be your primary residence. You have to live there.
100%. Yeah.
So in this situation with a husband and wife being married, would she even be able to get that first time buyer loans since her primary residence is probably where she lives with her partner?
Well, you're going down this little rabbit hole.
Okay.
But what I would say is that if they were actually looking to buy a new primary residence, correct, and they were both going to move into it.
Okay.
And she was the only one on the loan, she could probably qualify as a first-time home buyer.
Oh, my rabbit hole questions stem from being on social media and people always trying to ask me the most like, how far down can we go on this question before I'm wrong, right? So I like to eliminate that up front, right?
Yes.
And we're not trying to commit mortgage fraud here, people, all right? So if they were to buy another house and she was the sole person on the deed, then they would be considered first-time buyers again.
She would be considered a first-time buyer.
So he wouldn't be able to co-sign for her or anything like that. She'd have to do it solo.
Correct.
Okay, cool. So it's 3 years. What if I owned a house in California 3 years ago and I'm buying in Nevada? Am I considered a first-time home buyer in Nevada?
Yes. If you sold your home 3 years ago in California, you didn't buy in Nevada for 3 years, and you're out shopping now after 3 years, first-time home buyer.
So it doesn't matter what state you're in. You just can't have owned a home in the prior 3 years, and you're considered a first-time buyer.
Correct.
That's fantastic. So if someone, let's say, someone sold their home 5 years ago, they've been renting, kind of waiting the market out for whatever reason, and now they're ready to buy.
Yep.
It doesn't matter if they were in California and they're moving to Vegas. They are considered a first-time buyer in Nevada.
Correct.
That's fantastic. So what is, now that we've, finally narrowed down what a first-time buyer actually is for people,
right?
What benefits do you get for being a first-time buyer?
The benefits that you get right now are there's low down payments. There's a conventional program out there actually with 3% down.
Yeah.
And conventional mortgages go up to $726,500. That's
crazy, right?
So it's a big number. In fact, one of our mutual clients that you gave over is looking at a house, and she wants to qualify for a first-time home buyer program, and it's also dependent upon income in a particular area too. So that can also be an issue with getting the benefits of a first-time home buyer in terms of income. If they're over a certain amount, like the median income in Clark County is around $80,000.
Yeah.
And so you can't be over 120% of the median income to really take advantage of those first-time home buyer programs.
You used a word that I love introducing my audience to, median income, right? So for instance, if someone's going to buy a house in San Francisco, the limit on what they're allowed to spend, I think the last I checked, in LA County, it's like $1.2 million that you can get. Whereas in Las Vegas, as you said, it's closer to $726,000, right? Because it's based off median income. But one of the things I use the median income to teach people is that, hey, your rent is also based off the median income. So sure, it's great. You're making more money, but guess what? All that says to your landlord is, hey, it's time to raise the rent. The median income's going up around here. Right.
And there's down payment assistance programs out there where they can actually get money from certain programs, and you have to meet those median income requirements.
That's a huge part of it.
And it's a huge part of it is the income.
I used to teach the Home is Possible first-time buyer. Back in like 2020, 2021, man, I was all over that program. But with so many people moving to Vegas, the program got a little bit wonky. Is that a good word?
That's a good word.
Wonky?
Yeah.
Where like it was switching all the time based on current rates, right? Like it went from, your whole household income could be $105,000. Then it was like $88,000. And it used to be, hey, you can get a home up to the maximum of your loan. And then it was like, no, the house has to be $350,000. Have you worked with Home is Possible recently? Can you give us any insight on where it is currently and if you think it's valuable for people?
It is now, because they just made some changes to it where there's what's called LLPA, and that stands for Loan Level Price Adjustment.
Loan Level Price Adjustment.
Correct. And so they are based on FICO scores, loan to values, debt to income ratios. There's a lot of factors that go into it. Essentially what a loan level price adjustment is an increase to the rate if you are a low FICO, a low debt to income or a high debt to income, a high loan to value, and it can make your interest rate higher. As a first-time home buyer, if you meet the income guidelines, all those LPA adjustments are done. They're out. They basically remove them, so it allows the first-time home buyer to get the best rate out there in comparison to, the people that have high FICOs, low loan to values.
Really?
Yeah.
So that's actually great, because a lot of the reasons I was turned off is because of what you have now educated me as LLPA, where lenders would say, hey, your client qualifies for $350,000, but if we add home as possible, they only qualify for $250,000. It's like, dude, they went from a single family house to a condo or a townhome. That's a drastic change.
Yeah.
So are you saying you're not seeing such a drastic difference between the two?
No, it's actually can be better. Like it's
really?
Yeah, it's now. And there was a lot of controversy when they were changing the LLPAs because of FICO scores. The people that had good FICOs were like, what, you're raising my rates and all that. The people that have great FICOs are still getting great interest rates. It's the ones that are not as educated on how to really play the game of credit and have a high FICO. Those people are now benefiting as well from the removal of LLPAs. Particularly
and with the
buyers.
FHA lowering that mortgage premium,
huge,
right?
That was difference. A huge thing. And we look at those. Sometimes it's a comparison now, right? We look at FHA because they reduced the mortgage insurance premium (MIP) from 0.85% down to 0.55%.
That sounds small when we talk about it, but that's actually a lot of money.
It's almost 0.3%.
Yeah.
If you look at like that, it's like if you had an effective rate, say, of 7%, well, now it's 6.7%.
That's crazy.
So it's huge. It can make a big difference. So FHA has become a very, very popular first-time home buyer program, but it's not necessarily for first-time home buyers.
Sure. Man. I have to repeat that at least 8 times a week. FHA is for everyone. It's not just for first-time buyers, right? So what would you say is right now, if someone reaches out and they say, hey, I'm a first-time buyer, haven't owned, and I want to qualify for Nevada's down payment assistance, right? Let's start with the requirements, because this is going to be huge. I think this is probably going to be our clip for the day. What would you say are the requirements for Nevada's down payment assistance?
The requirement is keeping your income below the median income of $80,000.
So it's $80,000.
It's a right around $80,000.
Is that for single income or for multiple?
That's household
income of $80,000.
Correct.
So you and your partner cannot combined make more than $80,000.
Correct.
So in this case, it probably would be better for just one person often to file.
It can
solo.
be, yes.
Okay.
Yep.
So you need $80,000 income. What's the next step?
Next step is then to see if they can qualify for the house that they want, right?
They still have to get the pre-approval process.
You have to go through the pre-approval process. We look at debt to income ratios. We look at the house that they're looking for. We look at interest rates, and does it fit within the needs that they're looking at?
Yeah.
And then they can get the down payment assistance program to contribute towards their down payment. Is that yours?
Oh man, I put it on silent too. It triggered on that phone.
It triggered on that one.
So annoying.
So
I'm sorry,
okay.
continue, Bill.
So no problem. So and then they go through the process of getting educated on it, how much it's going to cost, because there's a cost to down payment assistance. Sometimes it can be really good, and sometimes it's not even worth it.
What's the cost? What does it typically cost a buyer to get down payment assistance?
Well, there's fees associated with getting money from the down payment assistance.
You get the class too, right?
You got to go to class. You got to get educated. You got to get certified. And so there's a program, and it's all good. I mean, it's all. I think the more education that you get, the better.
Yeah.
Right.
Yeah.
And the more you know, and the more you know what you're getting into, the better.
I think it's a benefit that they make them take that class before giving them the money. I do. Yeah. They're basically walking through what I do online, a real estate class. And I love that they make them do it, because the more you work and try to earn something, the more you appreciate it and value it, right? But the payment for what I remember is like $750, right? $750 for the payment for the home buyer class.
Yeah.
Yeah, somewhere around that range.
No, yeah, and so there's costs to it.
Yeah.
But then it allows you to buy a house and have money contributed to it. The only downside that I see that I don't like is that sometimes it locks you into a particular program for a period of time.
Yeah.
So if rates were to drop, you may not be able to actually refinance and take advantage of a lower rate. So there's maybe issues once you get into that type of program.
But nothing's perfect,
No,
right?
no.
If you're getting the money to get into, if most people tell me, hey, the hurdle is getting that initial down payment saved up. Okay.
That's the big issue.
Yeah. If someone's, now here's what I like to tell people. My real estate classes actually first blew up when I started explaining how good Nevada's Home is Possible program is. I would say, okay, listen, take a $300,000 home, FHA loan. Your down payment's $10,500. This program will give you 5% of the whole loan in down payment assistance. And guess what? That number is often higher than your down payment. And they'd be like, what? And I would show them the math. Hey, 5% of 290 comes out to this, right? And then 3.5% is this. And they'd be like, oh my God, this number is bigger. I'm like, yeah, it's going to cover your whole down payment. Plus you're going to have an extra $1,000 of closing costs.
Yeah.
Right?
We should do a full-on podcast just on this.
Honestly, I think we should.
We should, because there's a lot of details that you have to get into and a lot of things that you need to know. We should do a full podcast.
100%.
Yeah.
But if you're a first-time buyer, right, those are your two biggest hurdles. What's a first-time buyer loan look like, which is a 3% down payment? Okay, can I get that 3% down payment covered? I can. Shit, it sounds like this first-time buying thing is pretty easy as long as I qualify, right?
Yeah, you have to qualify. I mean, there's obviously qualifying, but it's just dotting the I's, crossing the T's, doing the math, figuring out how much you qualify for.
In my journey through social media and real estate teaching, what I have found is there's a significantly bigger portion of people with pretty good credit and just not enough savings than the opposite of people who have a lot of savings and bad credit, right? It's overwhelmingly one way. So if we can provide those people with good FICO scores, good debt to income, maybe just not enough savings, if we can provide them an avenue to home ownership, to me, that is definitely worth an entire class.
Definitely. I mean, it's just getting a game plan, and it's starting out, where do you stand today and how do you get to home ownership?
Sure.
And just educating them on the steps to get there.
100%. In fact, I would like to, I know we talked about it last week. I would actually like to bring Robert on as like I don't know how we fit it into frame. We'd have to switch it around, but I'd like to do like just a full scale interview of how you bought your first house, the process through it, right? I think walking people through it and explaining down payment assistance, and I think that would be fantastic.
Yeah.
So for first time buyers, would you ultimately say now is a good time to put their foot into the market?
I think so, for sure. And I think it's just a matter of, with rates elevated a little bit right now, there's not as much pressure on sale price.
Yeah.
And so I think that people can get in right now if they can qualify. They may pay a premium on their mortgage, but get in now before they pay more on the house. And it's better to pay a little bit of a premium now than, buy a house that costs $20,000 more.
Yeah. I don't know if Austin will be able to put this on the screen. We'll talk about it after, but Blackstone, the huge hedge fund group, not BlackRock, Blackstone, just announced back in April a $30.4 billion real estate fund that was approved. And guess what? They're buying cash. They don't care about the interest rate. They don't, right? No. And I don't tell that to scare your first-time buyers, but you have to know the truth. People think like, oh, no one's buying houses because no one can afford it. $30 billion can afford a lot of houses.
Here's what I see, Brandon. When people come to me, they go, I want my house payment to be $2,100.
Yep.
I don't want it to be any more than $2,100, maybe $2,200. And at the same time, they can actually qualify for a mortgage payment at $3,000.
Yeah.
That's a big jump between $2,200 and $3,000.
Yep.
And so the mindset either has to change from the standpoint of you're going to pay a premium right now, but if you wait, those values more than likely are going to go up and you're going to pay too much for the house and your payment still might be that, $3,000 down the road.
Yeah.
But if you buy now and the rates come down, then you can reset your mortgage payment and it may come down to $2,400 through a refinance.
buy the house, date the rate, right? Now, how often do we repeat that? I think, because we got to wrap it up soon, I think the single best advice that we could give a first-time home buyer is this. Yes, the prices are going up, but you're thinking about that from the wrong perspective. Because the second you buy a house, guess what? Now the price on your house is going up the same exact way. Don't put so much focus on how much money it's going to cost you. Put more focus on how much money that house is going to make you. Because the second you buy a house, the next day, it's probably going to be worth more money in this market.
Yeah, and we have tools such as a cost of waiting analysis and just forecasted appreciation and forecasted interest rates. And it's a great analysis to take a look at because you're going to pay more down the road.
Shit, I think you just scheduled our next 2 videos. I think you just did it right there. Cost to wait analysis and down payment assistance. I think we have the next 2 classes ready to go.
I love it.
Hey, Bill, thank you for your time as always. It is, you guys, the reason I bring Bill on here is because a lot of people reach out to me because, like they said, they want a house, they don't want a mortgage. But there's no way, unless you're a cash buyer, to get a house without the mortgage. So I bring Bill on because there's nobody more educated on mortgages and the lending side. And truthfully, you guys, I can say this. Most of you don't need real estate education. You need mortgage and financial education, which is Bill specializes in. So I'll always have him on the podcast. You guys can always, if you jump on the live, ask your questions either on YouTube Live or Instagram Live. Ask your questions. Bill's going to answer them once we go off the podcast. Thank you, Bill, for your time as always, man. Seriously, thank you.
Thanks, Brandon.
I am. All right, you guys, I'm Brandon from Vegas. This was a blessing today.